Welcome back to Primary Source China Investment. This week we're on show H7. And if you recall, a few weeks ago, we did a show about canals. So this week we thought, what do canals lead to? Well, ports. In order to have a functioning maritime business, you need to have ports. And there are three things we want everybody to keep in mind here. One, China is the world's largest exporter. Two, China is building ports around the globe. And three, shipping is the cheapest way to move goods around the world. So based on those three things, it's not surprising that 7 of the biggest ports measured by volume are in China/Hong Kong. What might be less obvious is how port management has gone global. There are 129 ports around the globe with an investment from China, and about 24 of them where China owns 50% or more. You can see on these maps, obviously all over the globe because China is exporting. China's trade partners with almost every country on the planet. China's port building is not only big, but wildly efficient. According to Port Performance Index, yes, that's a real thing, Chinese and Chinese-invested ports are all over the top names. And if you're thinking, well, how does the largest economy's ports measure up? How does the U.S. ports measure up? Well, the top name on the chart for the U.S. is Charleston, ranked 53rd. And if you're wondering where the U.S.'s biggest port ranked, well, that would be Houston, and it ranked 312th. LA was 375. Compare that with some of the large ports in China. Guangzhou, Ningbo, Hong Kong, Tianjin ranked 8th, 12th, 15th, and 20th respectively. If you want to have an export economy, you need to be able to get ships from your ports to the ports around the planet. I'm going to stop right there because there's some nefarious talk about why China's building ports, but just from an economic perspective, what are your thoughts, Penghua, when you hear these numbers?
I completely agree with you. So people need the trade, definitely, and also the cheapest way to exchange the goods through the water. So that is the why explain why China economy get a unique advantage in the world compared to any other countries because like the China they have the Yangtze River. So Yangtze River really connect major important cities in China from the upstream Chongqing, Wuhan, Nanchang, Shanghai. That really means almost 0.5% of the Chinese people, all those major cities, they can exchange the goods through this river. Obviously, this also connected to other rivers, a little bit smaller. So Yangtze River, and I just see the number, I don't remember very clearly. It's much bigger than the United States Mississippi River. So that Mississippi River is not connected the major city or ports. So that will give the unique advantages in China to exchange the goods. So follow this idea, really China expanded the ports constructions across the all of the world. So that's really means go through the one belt and the one road. So that's a lot of the noise about the threat or other political conflicts, but the most basically idea, those ports is really improve the economy significantly. So the chart you already listed, so that is very important, either in the domestic and worldwide.
I want to say something about some of those doomsayers because there are people saying, oh, China's building these ports for nefarious reasons. It's a debt trap. Some of that might be true, but just look practically speaking. China is an export economy. Shipping lanes, ports, and like you say, the canals are the lifeblood of an export economy and critical to a country that also depends on imports to feed itself. If China's exporters and importers have to connect with inefficient ports, that's a huge drag on the economy. So why not help build ports to match the efficiency of those ports on the mainland? The nefarious part is, sure, would Chinese owned ports overseas prioritize Chinese ships coming from China? Yeah, that might absolutely happen. But other countries need to get their port management in shape. If we look at the US ports are fighting unions to keep jobs and stave off automation. This reminds me of US auto industry in the 1970s. It will not end well. If you are just holding on to jobs and not being efficient, not being competitive, you will lose. You see already the US ports are dismal in terms of the volume that they can, the throughput that they can achieve. And if the US wants to grow its way out of debt, efficient ports are a huge step in the right direction. So we're going to see another round of negotiations with these port strikes in the US, and I really worry that it's going to go very badly for the US exporters and the US importers that depend on those ports.
Yeah, I completely a little bit worried about those strike. Firstly, I totally agree. All the technology automation should improve the people's life rather than remove people's job. And then how to work together with the new technology. That's really everybody need to think about it. And the most recent one, everybody probably know, like the China work with the Cambodia and open the Funan and Taco Canal. The port is very important. And as long as make full use of it, it will definitely become the local economy center.
Right. So I thought we'd end with a few of the big players in the port building space. Two that come to mind are China Communications Construction Company. Say that 5 times fast. It's 中国造舰. The stock symbol is 601668. And China First Harbor, 中交银行. That's 601800. They are up 14 and 3% over the past 5 years, which, that might not sound exciting. But during the past 5 years, the CSI 300 is down 45%. And that's even after the last 2 weeks. So these are the kind of companies that are doing well, they pay dividends, and they have huge outperformance over the index. So with that, we're going to leave it for show H7. Thanks for tuning in, and we'll see you next week.
Thank you.